Conversation, I would like to pose a question to both of you, if you don't mind, and explain what makes guarantees so effective at mobilizing private capital when it comes to climate investments. If I may start with you, Ken.
Okay, thank you, Amin. I think there are really four reasons why we think guarantees are so critical to mobilizing private investment. The first, you said, is guarantees address the real problem that financial institutions have in investing in emerging markets, and that is dealing with the risk of the investment. The risk may be perceived and not real, but they're not investing because of that. That's why their numbers are so low in this. It's not they don't have the capital, but they want to know that they can protect that capital with some sort of guarantees. The second is that guarantees provide, we think, the most effective way of leveraging government money. To get to the scale we need on guarantees, which is trillions of dollars, you're going to need some government money to go into the guarantee fund to make sure that there's adequate capital there. And in a guarantee, you've really got to put in cash in the amount of money that covers the expected risk of the facility. So for example, on an energy project, if you think there's a 10% risk, you've got to put in only 10% of the amount of the guarantee you're doing. You need backup balance sheet guarantees, but the amount of cash going in is relatively reasonable. So it enables you to take this limited government funds and leverage them to the maximum extent possible. The third is we think we can set up very efficient guarantee facilities. For a private company to invest in a project, it has to be a simple, efficient way, a process to do that. So we've tried to, I won't go into details now in the proposals we're working, come up with something that's very efficient, that works very well for investors, that only requires one level of due diligence. Right now in doing projects, you can have up to 3 levels of due diligence, one from the guarantor, one from the host country, and one from the company doing that. That's too bureaucratic and too slow. And finally, I used to say, we would not require backup country guarantees. Right now, most guarantee programs require backup country guarantees. I would strengthen that in saying you can't have backup country guarantees, because when you start getting to the level of trillions of dollars, developing world and emerging market countries can't do that because they pick up debt whenever they do that, and they can't afford that kind of debt. So if we set up the right kind of guarantee facility from developed countries, then in fact we can say we don't want backup country guarantees, and we can structure it so that the developed countries realize that, and they're taking the risk on that. But they've committed a very large amount of money in the Paris Climate Agreement process, and arguably this is the most efficient way for them to use their money.
Yeah, you talked about debt in developing countries. I was looking at the statistics just before coming here yesterday, that the cost of servicing debt in the low-income developing countries has quadrupled in the past decade. And just in 2023, the external debt servicing reached around $1.4 trillion for these economies, which is a magnificent sum. And as we said, these countries cannot afford to have a guarantee on their balance sheet as well. Mahesh, what are your thoughts on guarantees role in mobilizing private capital?
I agree with Ken that guarantees are a very important construct. And in fact, if you go back to the original foundation of the World Bank and IMF at the Bretton Woods Committee, Bretton Woods Conference, the Lord Keynes' idea was to actually create a guarantor, not a lender. But somehow the institutions have become lenders, not guarantors. The capacity of the World Bank and other development banks to guarantee has been grossly underutilized. And it's simply because their guarantees are really a mess. They guarantee partly this, partly that, and partly something else. And so the investor has to look very carefully at what it is that is guaranteed, and mostly it's not guaranteed. Whereas we think that what you have to do is to take the market concept of a full wrap, which is 100% guarantee of principal and interest on time. And if you do that, investors say, fine, thank you very much. In 30 seconds, you have sold the deal. And you can get trillions of dollars of funding. In fact, the guarantee industry provided $3 trillion of funding in the markets without a loss in the US before the financial crisis. Today, it's a $500 billion industry, even with the financial losses that they took in the great financial crisis. So we want to create a guarantee company like that in the emerging markets with a full wrap. As Ajay Banga says, it is the kind of a guarantee that he calls a rating agency wrapper. So you don't ask questions, you just put a blue ribbon around it, around the deal, and away you go. The guarantor worries about the risk because he has to really do diligence in advance to make sure that the risks are really takeable and that they are well protected for their own standpoint.
Right. So you said that you are working on that on such current mechanisms. I understand you are working on an initiative called Climate Finance Company, or CFC. Can you provide some brief introduction about the company, what it's trying to accomplish?
By all means. What we want to do is to provide a full wrap guarantee for principal and interest, ensuring timely payment to the investors. These guarantees would elevate the credit rating of the viable climate deals to single A level, where international investor demand is strongest. So in doing so, we make a much wider investor base accessible to the climate-related projects.
Ken, you mentioned about a proposal that we are working on called Emerging Market Climate Investment Compact, or EMSEC. What was the impetus for this project, and what is the EMSEC designed to do?
Yeah, well, again, the impetus for the project was what we've been talking about. When we looked at the environment out there, in 2022, the International Finance Corporation said that they estimated that about $260 billion was spent in emerging markets on the energy transition. Mm-hmm. They also estimate, the International Energy Agency, I'm sorry, they also estimated that by 2030 you needed between 1.3 and 1.9 trillion dollars of investment, and other estimates are up to 2.3 trillion. So and for biodiversity and nature-based projects, forest projects, the estimate is you need another 800 billion. This is a year. So we felt that gap can only be filled by large institutional and private investors. And again, that the best way to get them, incentivize them to do that, was to put in place guarantees. We also looked at how complex it was to do a guarantee facility out there. And we decided to come up with something that we thought worked for investors. We had to do something that investors were comfortable with in doing their work. So what we decided was that in EMSEC, we would pre-qualify an investment firm, let's say a Goldman Sachs. We look at them and say, you're qualified for our guarantees. We'll audit what you do, but we won't do double due diligence on it. And again, we thought, an institution like Goldman can do a perfectly good job of that if we do it. We would set standards for them on environment, on social equity, on just transition. But then we'd say, basically go out and do the transaction. And there are other elements of it, but that's the prime element of it. We wanted them to do a portfolio of projects, for example. So again, we thought if we came up with an innovative new large-scale facility, the other thing that pushed us to do that is there are a lot of guarantee funds out there, and they're all very good, and everything is very important, including the work from the World Bank, but none of them get anywhere near the scale that's needed. So our proposal was a facility that would guarantee over 10 years between 100 and 500 billion dollars. And that seems like a large number. When you break it down, if you assume, for example, a 10% loss rate, that means if you did 10 to 50 billion dollars a year in guarantees, you'd have to put up between $1 and $5 billion a year. And if you had 10 countries putting in the money, they'd have to put in between 100 million and 500 million each. That's not a low number, but we thought it was a doable number, particularly in light of the fact that the developed world at the last COP agreed to put in 300 billion a year into investments in these companies, including private investment. And there's no roadmap for it. There's no description of what they're going to do. And so we thought this fit in with that commitment, and this was the time to get it included in that.
Right. Besides the scales that I mentioned, Ken, what are some of the other distinguishing characteristics of EMSEC compared to other guarantee proposals out there?
Well, there are two distinguishing factors. One, we think, is how efficient the facility is. In other words, by coming up with a facility that doesn't require double due diligence, it's very, very effective and really attracts institutional investors because of that, because they can feel comfortable doing that. And the second thing is almost all facilities now require backup country guarantees, and we would not require that. But the scale is an important part of it, and what we're doing, a lot of these are privately funded guarantee facilities, or in the case of the World Bank, the money is split among many different things, including environment and climate change. In this one, because we're bringing in government funding, we think we can get the level of funding we need to really scale the project up.
Interesting. Mahesh, when it comes to CFC, what kind of investors are likely to support the climate finance company? In EMSEC's proposal, we are looking at sovereigns, sovereign wealth funds, governments, foundations to provide the funds for the guarantee facility. But how about CFC's model?
Well, I think all of those, but I think we would also focus a lot more on the private sector investors. We'd like to bring in insurance companies, pension funds from the private sector, and of course development banks and sovereign wealth funds. We are in the process of raising capital. We're talking to the MDBs themselves. I used to work at an insurance company of the kind they want to set up for a decade, and I set up a company like that in Asia with the ADB. But we had 17 investors in that company, which included Government of Singapore Investment Corporation, ADB, ourselves as the private sector and the manager. We had Employee Provident Fund of Malaysia. We had Nomura Securities, Bangkok Bank, and we had AIG before it became defunct. It was AAA then. So we had an insurance, we had a public-private partnership. I think that's what it needs to be because this is the area of infrastructure and climate finance is invested with risks that are public and private together. So you need to have a partnership in the investor pool.
Right. Go ahead, Ken.
Yeah, I want to emphasize that the facility we're proposing is a scaled facility, but it's not the end. I mean, we need everybody who can to do similar facilities. Or what Mahesh is doing sounds fantastic also. So we this is an all-in process. We need every guarantee facility we can. We need every grant we can get. We need green bonds. To get to this couple of $1 trillion a year, you've got to do a lot of different things. And we think the guarantees that we're proposing could be very, very helpful, but the guarantees Mahesh is proposing are also very critical. So we need everything if we're going to succeed in this effort. We're really trying to rebuild and replace a key element of the world economy. And that's a massive, awesome task. And so a lot is needed to do it.
I think Ken is exactly right. In the insurance industry, in the guarantee industry, you basically, the guarantors are a club. They insure, the primary guarantor insures, and then he reinsures with a secondary, with a reinsurer. So you can lay off your risk and manage your portfolio of risk. So it is necessary to have other guarantors who will take some risks that you cannot because you have limits. And so others have the same needs. So having a large set of guarantors is a good idea, but they need to all work efficiently. Yes. And I think the advantage of the private sector experience in this is that our guarantees are timely pay, full payout. And so it's not partial risk this and partial risk that, which is what the World Bank does. That's necessary too in some cases. Indeed. But I think that's not the scalable product. The scalable product is what we are talking about because it's simple for the investor to make a decision in 30 seconds.
Indeed. So when it comes to CFC's guarantee mechanism, who are the end beneficiaries? Would investment grade countries definitely, but non-investment grade countries? What kind of projects are you looking at?
Those are important questions. The construct, our business model is hinged on taking a good project and making it better, not taking bad projects and making them good. That's a difficult job. So we take good projects which are investment grade and make them higher investment grade. So we have to go first to investment grade countries because we don't have to worry about country risk over there. Exactly. Then we get good projects in those countries and bring them up to a single A. We take some projects in non-investment grade countries because you can take political risk insurance and liquidity facility guarantees, like for 2 transactions, one in Egypt called Virtual and another transaction in Turkey called ELZ, which were brought up to investment grade by the guarantees of MIGA and EBRD. So if we get such guarantees to bring them up to investment grade, we take them to single A. It can be taken to double A too, possibly. But that's to make a good project better is our goal, and to make it more accessible for the investors. So that's the and the investors. The kind of projects would be renewable power. It could be e-mobility, purchase of vehicles that are 2 or 3 wheelers or 4 wheelers that can use electric power, for example. Greening the buildings and so forth. So the mind boggles at what you can do to make things better for climate. And so projects that are viable, that are cash flow generating, that are well structured, and able to sustain good credit, those would be the ones we'd look at. And the countries would be investment grade first of all, and then non-investment grade. Thank you.
Ken?
Yeah, I think we're somewhat similar. We think this would work best at the beginning with sort of the large middle income countries that have a more developed financial system, like a Brazil, a South Africa, or Chile. Turkey. We could go through that list. Eventually, we might be able to cover everybody, but if you sort of allocate among the different funds out there, we would do that. We think the World Bank in particular can play a critical role in the poorer countries where it wants to do a lot of work anyway and where they've got tremendous experience. They can take the lead on those, not saying they can't do what we're doing, we can't do what they're doing, but I think the logical allocation is we would concentrate on the middle income countries and go from there.
Definitely, we are actually working on a few case studies on Brazil, of course, on Chile, Mexico, Indonesia, India, South Africa, and Vietnam as being the very attractive destinations for renewable investment, and they have a good working capital markets on the ground. So those reports are going to come up. But tell us more about. You mentioned Brazil. Tell us more about COP30 in Brazil. I'm sure you have. I'm aware you've been in communication with COP30 presidency. How are those discussions moving forward?
Well, we've been working hard. We've been down to Brazil 3 times already this year on trips, and the reason we're doing that is that we think the COP coming up, the Conference of the Parties, the Paris Agreement, is in Brazil. When you have a conference of the party, the country where it's held has the presidency of that COP. We think the only way a proposal like ours can get through is if it's part of the negotiating process in the COP. That the developing countries have to say to the developed world, as part of our road from Baku to Belém, as part of the road to get to 300 billion and then 1.3 trillion, which the parties pledged in Baku, we need a facility like this as part of this. So they would go into negotiations and in their recommendations and say, we ask the developed world, or ask or demand, however you want to put it, to put together a proposal like this and to fund a proposal like that. We only think that'll happen if it's part of the COP process and they demand it. We think if it is, that can really happen. So we've been to Brazil a lot. We've held over 300 meetings on this in Brazil and around the world, probably 60 or 70 different meetings in Brazil. We met with the COP presidency. We're meeting with them again tomorrow. We met with the finance ministry. So, we're pushing hard to get this included. It's always difficult to get something like this included, but, we've got a pretty good chance, we think, right now to do that. To really get this off the ground, we proposed a pilot project in Brazil this year, which we would set up this year. We might not have it fully set up. We'd have the concept fully developed and the people that we want to work through agreeing to the thing. We want to do that by the COP. And then it's going to take, after that, a little bit of time to set up the main, the main MSIC facility. Our goal is to get it approved this year, get a pilot project, then work on the main facility next year in time for the next COP.
Right. So we have about 5 minutes left, so I want to use this time to ask both of you, where does your work go from here? What do you expect for the outcomes from the spring meetings to assist your projects moving forward? And what are the next steps and milestones you're looking forward in the next year? Mahesh?
Well, I think Ken's effort is brilliant, frankly. I think it's good that he's working with the COP30 focus. I think that's a smart focus. We have not done that. We might begin to do that. We have been focused on the MDBs and on the insurance market. We are developing our transaction volume projections. We are working on our information memorandum and the location of the company, which could be Singapore or London or New York. So there are regulatory issues because it'll be an insurance company. So we are in the midst of the setup of the company. I set up a company like this 30 years ago, so I've been around the block. And we have a nice team. We have a 10-man team that's stellar with experience in the industry and about 25 years experience on average. And we are delighted to be here and talking to some of the potential investors. So we hope that in this current environment where climate commitment on the part of some countries is flagging, that the rest of the world can pick up and the private sector can come to the plate and play a role in capitalizing a guarantee company along with the public sector institutions that are trying to do the same thing.
Right. So you mentioned you're focusing on MDBs. So what do you think about the streamlining of the MIGO process in the past year? How has that helped your operations?
I like the objective. I think Ajay Banga is a brilliant man with a lot of savvy because he has been around the block at Citi and MasterCard and so forth. But making this work as a single, as a one-stop shop is not easy. What I've been told is that it's actually a two-stop shop because the IFC is not a part of it. Well, IFC should be a part of it, and it should be one-stop shop for all the 50 guarantors. There are about 50 guarantors if you have DFIs and MDBs combined. You know, there are too many different kinds of guarantees, and then investors get confused. So they need to simplify that, and that's the idea of the kind of a guarantor I'm talking about. We could use them as reinsurers.
Yeah.
So I like the idea. I've gone to MIGA, and MIGA tells me where are the deals. They say, where's the pipeline? So in order to get a pipeline, you have to be hungry like the private sector is. You have to go and shake the trees. They do some, but they are AAA sitting there in Washington. They expect deals to come to them, and many do. But there are deals out there. There is a pipeline. There is actually, we looked at CPI statistics. CPI statistics are the best in the market on what's going on in climate finance. They've shown $385 billion of financing actual taking place on average in 2022, 2021, 2022. And that's not a small amount of money. It's not the amounts that you talked about, because there are much more amounts, higher amounts are needed. And I'm only talking about public power sector funding. That's only a part of it. I'm not including public funds. 385 is market-based funding, so at market rates. So that's already quite a lot.
Yes.
We want to leverage that up.
Yes, indeed. Ken, next steps for you?
You know, as I said, it's very hard to win approval of a proposal for $100 to $500 billion. So what we're concentrating on here, and we're going to be concentrating on in the next year, is finding people who back the project. So in other words, we're working very closely with Brazil. We work closely with South Africa. We've started working with a few countries. But first of all, we need support from a varied number of countries. And we're working on building that support this year. And we need support from as many people and institutions as we can. We'll probably work next year more on support from the investors, from the people who will be guaranteed on that. But right now we need the kind of support necessary to let the people in the COP process know that this is something that is really important, demanded by a lot of people. A lot of people agree this could be extremely helpful. So that's why we're here today and why we're working on this in general, because it is a process of winning approval. That's why we've had 300 meetings and are traveling all over the world. So it's a process, but that's what we're doing now.
Thank you, Ken. Go ahead, Mohseni.
A lot of shoe leather.
yes, shoe leather costs, right? Thank you for both of you for being here. Really appreciate your time, and I wish you both all the best during the spring meetings and moving forward towards the COP. Excuse me. Thank you for joining us for this conversation. To stay updated on the Atlantic Council's coverage of the spring meetings, follow #FutureOfEcon. Our next programming will be at 10:45 a.m. today, addressing debt and international financial architecture with the Paris Club. Have a great rest of your day. Thank you.
Thank you.
That was great. Thank you very
Thank
much.
you.
Thank you very much.
Thank you.
It was very kind of you. Thank you.